A couple of 3-4 years ago, Obamacare was something that we were all talking about. We had our two guests on a year or so ago to talk about this. We're back to talk about it again. I think people at the onset when this was passed were totally confused. I think the papers were all saying at that point that many of the legislators that had passed this never read it. If they were confused then, they're even more confused now. Back with us, Larry Winter of Winter and Scoggins CPAs and Brian Peters from Advanced Insurance Strategies. Good morning, gentlemen.
Good morning, Dave. Good morning.
Now, according to my count, there were 42 changes that have taken place to Obamacare. 24 were ones that the president made on a unilateral basis. 16 were ones that Congress had passed and the president signed. 2 of them were initiated by the Supreme Court. Let me ask you first, Brian. You've got clients out there you've been working with for years and years. They've got to be at their wits' end, and I guess you do as well.
Yeah, obviously 42, some of which directly impact small employers, some impact large employers, fully insured versus self-funded. They don't all apply to every client, but having to decipher through the law, and then a lot of the changes really were clarifications of areas in the law that just didn't exist. In other words, when you write a law that's going to impact something that's this large of the economy, obviously they just didn't hit every detail. A lot of these actions have been to clarify things, and some have been direct changes to the law as well, though.
But they have to be confused as to, are they covered, will they be covered in the future? And I'm sure, Larry, you have the same situation.
Well, my situation deals more with employers. I have small and medium-sized employers as clients. And before Obamacare, most, and by that I mean the vast majority of employers worked out health care for their employees somehow. Some level of care somehow. And with Obamacare, what we have now is fear. A lot of people that employ individuals at the lower end of the wage scale gave up. What they did was they found out if we employ somebody for 20 hours a week, I don't have to give them health care. So they took people who were working 39 hours a week and reduced their hours to 20 and hired another 20. So, by the way, the government declared that as victory because the number of employed people went up. Okay, but the ones that were employed lost what medical benefits they had, and instead of being able to survive on their 40-hour-a-week job, they're not able to survive on their 20-hour-a-week job. Employers are afraid, what is this going to cost me? We saw what the surge in medical insurance premiums for small employers was for 2014, and an average to my clients was 30%. And those are the numbers that are being quoted to us for 2015. And employers now are saying, I can't afford this anymore. It is better for me to pay the penalties and just give up insuring my employees. Now, whether or not that was the intent, that is going to be the consequence, be it intended or unintended.
Mm-hmm. What happens to the penalties as we go forward? I'm sure they're less now than there will be in years to come, Brian.
Both the penalties are obviously going to be indexed, so they will go up in the future, especially the individual penalty. Already the first 3 years, it's been laid out what those penalties will be. As Larry mentioned, almost every company is really looking at, does it make sense to continue to offer insurance or pay the penalties? And there's some other strategies too that some companies are implementing as far as offering insurance, because technically within the law, what you have to do is offer affordable coverage that meets minimum essential benefits. And so long as you do that, you will avoid the penalties. However, some employers that haven't offered insurance to all their employees The fear is if we do offer this, we may end up with twice as many people on our plan, which depending on the industry, they just flat out can't afford to do. So there are a lot of strategies around how to just comply with this law. Unfortunately, as Larry mentioned before, they were figuring out a way to do it before. And now it's become much more complicated to try to do the same thing they were already doing. And I feel a frustration amongst my clients that we were doing right by our employees, offering them insurance, paying for a good portion of it, and now we're being asked to provide all this additional information. Our rates are going up, and there's new laws and regulations to comply with when we were doing the right thing in the first place.
Mm-hmm. Have you found that a lot of clients of yours have cut hours down to 20 or less?
Mine in particular, depending on the business and the actual industry, we've seen it in some areas as a technique. Depending on, like I said, small employers under 50 don't have as much of an incentive to do that at this point. Larger employers have looked at that or looked at just restructuring their benefit package altogether just to try to mitigate the effects of the law.
One of the other impacts of this is many of my clients, again, wanting to do the right thing for their employees, have what the law refers to as Cadillac plans. Okay, but these Cadillac plans didn't include certain things that ACH now mandates. The employees were happy, the employees' doctors were happy, the medical system in our area was happy, and everybody felt good about it. Well, now we've piled on all these additives, so the prices have gone up, so employers now are saying, okay, it looks like I'm going to have to offer the minimums, which is several grades lower. So I'm still going to offer you insurance, but it's going to be the minimum that the government says I have to offer. And the employee didn't benefit from this, and our medical community didn't benefit from this.
It's from coverage they didn't want, didn't have, and didn't miss.
Yeah, I mean, it's kind of hard to explain to a 70-year-old woman why she needs to have pregnancy and childbirth coverage, and it's really hard to explain that to the 70-year-old husband.
I can understand that. Brian, one more question about the penalties. You said they're indexed and will most likely go up. Is it your understanding that at some point the penalties will be so high that the option will be to get some kind of coverage instead of taking the penalty, which they maybe will do now?
I think there is a fear of that at this point. It really goes back to what the ultimate goal of this law was. You know, is it to move closer to a single-payer system? Is it to really protect the insurance companies, which I think a lot of people have seen now as this starts to roll out, that the insurance carriers, which initially looked as though they were not for this, have jumped on board in a lot of capacities now that there's a backstop to help them if they don't perform well for these first few years of the law and the implementation of it. So I think that from that standpoint, the penalties I think will affect how this law moves forward as far as are people going to go to individual plans, or is it still going to be a very strong employer-based system? So the answer to, as you probably tell, is I'm not sure. I really think that the penalties will go up in general, but how much will really impact how we move forward with the law.
Again, there's 42 changes. Some of them, they've been changed more than once. Is everybody pretty much confused and isn't really sure with most of these things what's going to happen, what's required, what they're supposed to do? Is that pretty much what you're seeing in every corner?
Larry can speak for his clients. On the small employer, under 50 lives, especially the small employers that really aren't large enough for an HR person on staff, they really are looking to their benefits administrator, to their accountant, and they really want to know at a very basic level, is what I'm doing okay? Or what else do I need to do? I don't think you're seeing many of them read through the 42 changes and trying to make sure they comply, but they do ask now, is this an ACA compliant plan, or am I okay with Obamacare? And then they turn it over to their accountant and make sure I file all my forms that are required.
Yeah. And then the accountant checks with Brian to make sure that we've done all this correctly. There's a second insidious part to this, and that is the self-employed or the retiree not eligible for Medicare. And, you know, they had insurance, got forced into HCA coverage. And now the big question is, do I really have it? Because they went on the system, they filed for it, and now they're getting questionnaires, and maybe you really don't have it, or if you hit a keystroke inappropriately, you're being thrown out from day one, and then they read in the press, as I did last week, that the government is even more concerned about people re-upping their insurance for 15 from 14, and they're scared. And I don't have any answers for them.
So some people are going to discover they don't have coverage only when they file a claim?
Yes.
I think it's a fair statement. What Larry's alluding to with the 2015 basically re-enrolling is that obviously the website itself, which got a lot of press last year, and not working until after the first of the year despite open enrollment starting in October. What you're seeing now is they really didn't think through the whole process on how these folks were going to renew their plans. So what's happening is there's really some confusion around, can you just stay on your plan, and then what happens? Well, depending on how you enrolled last year, when your renewal comes around January 1, the problem is not around so much the health plan. If you don't move or select a different health plan, you will stay on the one that you're on, assuming it hasn't changed, which you may or may not know about. But the other issue is most people, and I think across the state of Georgia it was about 78% that enrolled through the exchange enrolled with subsidy, which means the reason they went through the exchange and enrolled was to actually receive the benefit to help them pay for their premium. Well, if you don't re-up your information, of course your information could have changed dramatically from last year to this year. That amount could change. So my fear is that a lot of people that were getting subsidized insurance, and maybe they're paying $60, $70 a month, come January 1, they're going to see the full premium show up on their bill, and we're going to have more medical claims here than we ever thought about from a heart attack, because it's going to be $400 or $500 when they were only paying $50 or $60. So we're worried about that, and there's really not been a real good answer from our carriers yet on how that's going to work, because they're relying on the exchange, which in our state is run by the federal government.